Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're talking about a really important dynamic which never gets discussed on YouTube, and there is a clear reason for why this is, but which can be a massive driver of returns for investors. If you find yourself on the wrong side of this dynamic, you could find yourself killing your portfolio, but use it to your effect and you'll generate really strong returns. It's not something that is really covered in any investing textbooks, but it most definitely is something which most professional investors will benchmark their positions against. So this is something that if you want to become a better investor, you should definitely add to your investing arsenal. In fact, Bloomberg have in the last few years been producing their own data sets underpinning this same dynamic. So if you want to be a better investor, it's definitely something to be focusing on. The dynamic we're talking about is sentiment. Now you're probably thinking, wow, this is a really obvious point, and it's not worth a whole video in itself discussing the point. However, bear with me. With a number of examples, predominantly focused on stocks, but also looking across other asset classes, we will demonstrate how important this really is. In this video, we're going to discuss everything about this, including why it's seldom discussed on Investing YouTube, and then how you can incorporate this into your own investing approach to make better investing decisions. Before we get into the video, please smash the like button. We don't do clickbait on this channel, which means it's not a favourite with the YouTube algorithm. By liking the video, you're massively helping the video reach a wider audience and letting the YouTube algorithm know it doesn't only need to be promoting the clickbaity content, which in the long run is not good for investing YouTube. It's massively appreciated if you do this, so please keep it up. If you're new to the channel, then make sure you're subscribed, and if you want to see more investing related content and want to join the private Discord group, then check out the Patreon page. As always, whilst my full-time office-based job is investing, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. So sentiment, what exactly is it? Now we use the term sentiment to refer to the overall attitude of investors towards a particular security or financial market. More broadly, you can take a step back and look at it as an indicator of the historical momentum to a specific stock or industry. Now it seems super simple, but stick with me. A positive sentiment towards any stock or asset class is a good thing for those who are bullish or hold long positions in it. It implies that investors are generally positive on it overall, and this will drive capital inflows, be it to the stock, the sector, or the asset class. The same is true for a negative sentiment. At that specific point in time, investors are more bearish, and so you'll see capital outflows. Now, the important dynamic here is that sentiment is transient. In other words, it can and it does change and reverse with time. It's not permanent. But being on the right side of this dynamic when making investment decisions is really important. Now, let's look at a few examples of this, all of which have been popular on Investing YouTube over the past couple of years. Now, one of the easiest ways which we can measure and monitor sentiment without using those metrics on sites like StockTwits and Bloomberg, which not all investors may have access to, is through Google Trends. We can then compare this to the stock price chart over the same period of time to map the correlation between how much the stock is being discussed, our proxy for the sentiment, and the stock price performance. Now, before we go into each of these examples, I want to say that I'm not picking on any specific stock and trying to talk it down at all. I do appreciate that many people may be holding positions in these stocks in hoping for a recovery in price, and that some may even have made big losses or be sitting on big paper losses. As we've mentioned before too, sentiment is transient and it can change and evolve. It will never remain permanently negative, nor will it remain permanently positive. In some of these examples, the positive sentiment has reached all-time highs, in part driven by social media and influencer activity, which actually is probably the dark side of investing YouTube, you could say. However, just because the sentiment is lower now, that's not to say that it may not ever recover. So firstly, let's look at tanker stocks, and let's take Nordic American tankers as our example. In April 2020, following the negative oil price dynamic, the popularity and sentiment for tanker stocks exploded. You could barely look on your YouTube homepage without seeing loads of videos discussing why all the tanker stocks would 10x from that point in time. That was reflected in the unprecedented levels of searches for NAT stock content being our example, Nordic American tankers. As you can see in this chart, this is closely correlated to the 3-year high for the stock price. Since this point in time, the stock is down around 70%. Now, the same dynamic can be observed across many of the other tanker stocks. Now, a very fair challenge at this point would be to suggest that actually this was an unusual dynamic, and this actually represents an outlier. But looking at a number of other examples, I'll prove to you that this just really isn't the case. Next up, let's look at penny stocks. Now, I appreciate that this is a very broad term, but we will drill down into this a little more to demonstrate the point. In January and February of this year, anyone on Investing YouTube would have struggled to find any content not related to penny stocks. The general appetite amongst most investors was for a greater degree of risk in pursuit of the next penny stock to explode, and a terrifyingly high proportion of videos were covering the next penny stock destined to 10x, 20x, 50x, 100x. The claims became much more and more outlandish over the coming months. Now, as a side note, very few, if any of these, ever did live up to those claims. However, as you can see in the chart, the sentiment and interest in the sector was at an all-time high. Now, I'm picking out a few examples within this specifically, but the first one of these, which was covered by many, was Bionanogenomics, ticker BNGO. Now, this is a stock which I must have received over 100 comments on from people on the channel wanting to learn more about it, and there was a load of buzz around Bionanogenomics. Now, as you can see, comparing these two charts, the sentiment for Bionanogenomics over the time it's been listed is almost perfectly correlated to the stock price performance over that same period of time. Now, not wanting to digress here too much, but as a pre-revenue company, Bionanogenomics relies upon issuing new shares to raise capital. In other words, in order to pay their bills, to cover the expenses and to keep the company going, they have to sell stock to raise cash. Any smart CFO capitalises on higher stock prices to do this, as it results in fewer shares having to be sold and therefore less dilution for the existing shareholders. This is just one reason why it's so important to understand what you're invested in and to understand the dynamics around it. Ultimately, this wasn't popular among many investors in BNGO, and it fell a long way from its all-time high. Again, this is just one example of this. There are loads of others which I will canter through so you get a better feel for this. Let's look at one of the meme stocks, for example, let's say BlackBerry. On the stock price chart, we can see a rally from nearly the 5-year lows all the way through to nearly the 5-year highs, at which point in time you see the same jump in all-time high sentiment. Another one of these is the obsession around identifying the next short squeeze stock too. There's an endless list of them, and these are just a couple of examples. Now, one area which is something which we have discussed loads on the channel before, for those who have been around for a while, is SPACs. Now, to be super clear here, SPACs have been around for ages, but they gained massive popularity during 2020 and 2021 as some phenomenal gains were made by investors in a number of highly speculative SPAC transactions. Indeed, I discussed several on this channel, both those which I had a strong long-term conviction in, for example STEM, Lifecycle, Golden Nugget Online Gaming, to name a few, but also those sometimes which I felt were overvalued, oftentimes against the majority of other people talking about it on YouTube, an example being Hylian. Now, while with SPACs, the target company is clearly the most important dynamic, and one has to know exactly what the company does and what the strategy is and how they'll execute upon this to ascertain whether it is a good investment or not. When the sentiment was at an all-time high for SPACs, this ultimately wasn't a dynamic which was reflected. Ultimately, this was not practiced by many investors, and for example, most EV SPACs had tremendous stock rallies in price before falling back significantly post-merger, and that ultimately has burned many investors. This dynamic has then in turn led to a decrease in the investor sentiment towards SPACs. As you can see in this chart, the sentiment for SPACs has worsened during the course of 2021. Now, let's compare two SPACs, on the face of it, and I'm massively generalising here, two very similar SPACs and two very similar targets. CCIV and the SPAC which in February 2021 announced its merger with Lucid Motors, an EV manufacturer with limited scale and manufacturing experience and a fairly geographically concentrated footprint, and with a very optimistic business plan. As can be seen on the chart, the market initially loved this, with it rallying to nearly 6 times the SPAC net asset value. Subsequently, that then fell back significantly, however it's still trading around 2.5 times its net asset value as a SPAC. Let's compare this to another EV SPAC, this time Gores Guggenheim, ticker GGPI, which much more recently announced its merger with Polestar, the former Volvo performance car arm, and now standalone mass-producing internationally EV manufacturer. Now yes, clearly this is at an earlier stage in the deal, however it's hard to argue with why the Lucid Motors investment is a better deal for the company. From a risk-weighted returns basis, it just isn't. Currently, GGPI is trading around its net asset value, just a minor premium to that. Now, this is a great demonstration of how sentiment in the SPAC market has changed so much. I'm almost certain that if this Gores Guggenheim SPAC had been in January 2021, for example, then I'm very confident it would have had a much more similar profile to that of Lucid and CCIV. Sentiment is so important, and this demonstrates that sentiment can drive the stock price higher for a company, even if its underlying performance, metrics and positioning is less favourable. I'm sure we will see GGPI pick up from here as the transaction completes and as they become more prevalent on roads globally, as they certainly are in the UK, but for the time being, the sentiment for SPACs has decreased, and that's that dynamic at play there. Now, it's not just the case for stocks, the same is true across all actively traded asset classes. Let's quickly draw on a couple of examples in crypto. Firstly, let's look at SafeMoon, which again I'm sure everyone saw all over their YouTube homepages, where many content creators were covering this as the next get-rich-quick scheme, and there was a path for everyone to achieve financial freedom through. Again, the same dynamic as with stocks, as you can see in these two charts. sentiment is almost 100% correlated to the token price. The same is true for so many other cryptos too, which were covered in a very similar way. I don't need to name them all, there's far too many to name, but we're all familiar with those names. A very recent topical example of this is where sentiment is really peaking is Shiba Inu. If you look at the sentiment over the past 7 days, the sentiment again is directly correlated to the token price performance. So look, whilst these are only a small handfuls of the examples I have, I think I've covered enough examples to give a flavour of how this is clearly important. Clearly in smaller, more illiquid positions too, this is more pronounced than in larger blue chip stocks, but you can't deny or ignore this dynamic wherever you're investing, because if you are, or you continue to ignore it, it will be to the detriment of your returns. So before we discuss how we manage this ourselves, why is this so seldom discussed on Investing YouTube? Ultimately, it comes down to how the YouTube algorithm works. Discussing topics which are popular or on trend brings in more views, which ultimately for investing channels which rely on the income from YouTube is something creators seek to maximise. Now this creates a dangerous dynamic for all parties within the equation. Content creators are encouraged to talk about the stocks with the highest sentiment, and where at that point in time, making an investment actually would probably not be the best decision. The more clicks and the more views the video gets, the more sensationalist it is and promising it is, the greater monetization potential the video has. Content creators are not incentivized to talk about lesser known stocks, which won't attract the same volume of views, but which perhaps may be superior investment for those investors to make. If that investing channel is that content creator's sole source of income, this is a dynamic which cannot be escaped. For viewers of these videos, it's dangerous, as if they take the video on face value, don't do enough of their own due diligence and make quick investments into these positions, then there's a great risk that this will turn out to be a bad one, or even just be timed badly so that you generate suboptimal returns. This also completely ignores the dynamic where a specific stock may engage a number of content creators simultaneously to discuss it and drive sentiment growth that way. Now it's been discussed on YouTube before, with many names dragged through the dirt for accepting staggering sums of money for intentionally or unintentionally misleading. It's a really dark side of investing in YouTube and it's just not helpful for anyone. So now we know and accept it's important. What can we as investors do to make investments with this dynamic in mind? Well, it seems like a very simple solution, but it's to check the sentiment levels prior to commencing establishing a position in any stock or any asset. If the sentiment is at all-time highs, then act with a greater degree of caution. Either hold off, or if you're still compelled to commit capital into that opportunity, then perhaps allocate a smaller sum of capital for that specific opportunity at the start, and then over the coming weeks as you properly establish your position, deploy the balance of that as sentiment decreases. So for example, if normally you'd commit 30% when you first initiate a position, if the sentiment's very high, you may want to trim that back to 15% or perhaps even less. Also, to quickly re-clarify that point, don't commit your entire investment in one trade. This is a really bad thing to do ever, and it's something professional investors never do. Establish your position over a period of time, and prior to establishing a position, make sure you know what your plan for exiting that position is too. Anyway, that's it for today. Thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel, then make sure you're subscribed, and check out the Patreon group if you want to see more exclusive investing related content, or you want to join the private Discord group. As always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear all the different opinions and perspectives, so please get involved. Thanks again for watching, and I'll see you in another video.